All right, folks, grab your coffee because we've got some explosive earnings updates you don't want to miss. Two tech giants, SoundHound AI and Motorola, just dropped their Q2 numbers. And let's just say, Wall Street is buzzing. Whether you're a seasoned investor or just stock curious, this earnings season is laying out major clues about where the markets might be headed next. SoundHound crushed expectations. Motorola outperformed in a stealthy move. And now everyone's wondering, are these stocks still undervalued or is the rocket ride already over? Let's break it all down without the noise, no hype, just the facts and what they mean for your portfolio. Let's start with SoundHound AI, ticker SOUN. This voice AI company beat analyst expectations by a wide margin. The company reported a second quarter earnings per share of -3 cents. That's actually 6 cents better than the expected loss of 9 cents per share. More impressively, revenue for the quarter came in at $42.7 million, well above the forecasted $32.88 million. That's a serious overachievement and caught the attention of analysts and investors alike. With this kind of momentum, SOUN is positioning itself as more than just a speculative AI play. It's stepping into the category of performance-driven growth stocks. SoundHound didn't just beat earnings. They raised their outlook too. For full year 2025, the company now sees revenue in the range of $160 million to $178 million. Compare that to Wall Street's consensus estimate of $159.6 million, and you'll see why investors are paying attention. That guidance bump is sending a clear message. The company believes its customer pipeline and product expansion are strong enough to outperform previous forecasts. Whether that confidence holds up will depend on execution, but for now, it's a bullish sign. This type of forecast typically reassures investors that management has visibility and traction in the market. The market reaction? SoundHound AI closed at $10.76, up nearly 20% in the last 3 months, and a massive 106% in the past year. That's not just a good run. It's a major momentum signal. Despite this rally, some analysts believe SOUN might still be undervalued based on its earnings potential and sector growth. Over the past 90 days, analysts revised EPS expectations twice positively and only once negatively, which suggests growing confidence. But investors should also weigh that against volatility. AI stocks are exciting, but they don't always follow traditional valuation models. Caution and curiosity are both required here. According to Investing Pro, SoundHound AI's financial health score currently rates as fair performance. That's an important distinction. While the company is growing fast and grabbing headlines, it's not yet in the strong financials category. It's still operating at a loss, after all. The real question is whether SoundHound can scale profitably. AI is a hot space, but also a competitive one. What sets SOUN apart is its niche focus on voice recognition for enterprise and automotive industries, which could be a game changer in the long run. Still, investors should monitor cost management and margin improvements over the coming quarters. Now, switching gears to a legacy name that continues to impress, Motorola Solutions, ticker MSI. This company may not be as flashy as AI startups, but it's delivering rock-solid results that are winning over long-term investors. For Q2, Motorola posted earnings per share of $3.57, beating the expected $3.35 by a full 22 cents. Revenue also came in above expectations, hitting $2.77 billion compared to the forecasted $2.73 billion. This is a textbook example of operational excellence. Motorola is showing that stability and predictability still matter in today's hype-driven market. Motorola didn't stop at beating earnings. Their guidance for Q3 2025 is equally optimistic, projecting EPS between $3.82 and $3.87, matching or beating Wall Street's forecast of $3.82. For the full fiscal year, the company expects EPS in the $14.88 to $14.98 range, again above the consensus of $14.72. On the revenue side, Motorola now sees FY 2025 coming in at $11.65 billion versus the projected $11.41 billion. That's consistent, confident growth in a very competitive tech space. The company's stronghold in mission-critical communications and public safety tech gives it a resilient business model that isn't easily disrupted. Despite all this strength, Motorola's stock is up a modest 9.65% in the past 3 months and 8.14% over the past year. Compared to AI rockets like SoundHound, it might look slow, but for risk-averse investors, MSI is delivering consistent returns with less volatility. It's also worth noting that in the last 90 days, there have been 0 positive and 11 negative EPS revisions. That discrepancy between analyst skepticism and actual performance makes Motorola a compelling under-the-radar performer. It's the kind of stock that doesn't grab headlines, but quietly builds shareholder value. Investing Pro scores Motorola's financial health as good performance. This is the kind of backing that gives institutional investors confidence. MSI has a strong balance sheet, consistent cash flow, and a clear focus on scaling its enterprise and government solutions. With an increasing global focus on security and digital infrastructure, Motorola's suite of services is becoming more essential. While it's not the type of company to double overnight, it offers stability and strong fundamentals, 2 things every portfolio needs, especially in unpredictable economic conditions. So where does this leave us? On one hand, you've got SoundHound AI, an exciting, high-growth, AI-driven company that's surprising everyone with its earnings strength and forward-looking confidence. On the other, Motorola, a seasoned, financially sound player, consistently beating expectations without the flash. The contrast between these 2 tech plays shows just how diverse opportunities can be in today's market. Whether you're chasing future innovation or leaning on past performance, earnings season is your chance to check the pulse of the market and maybe even find your next big move. Just make sure you're investing with your brain, not just the buzz. One of the biggest factors influencing SoundHound's valuation is the broader wave of AI enthusiasm. Investors are pouring money into AI stocks across the board, from small-cap startups to trillion-dollar giants. That means SoundHound's recent run-up isn't happening in isolation. It's part of a much bigger trend. But here's the thing. Hype can inflate valuations faster than fundamentals can catch up. So while SOUN is outperforming expectations now, the challenge will be sustaining those results when investor excitement cools off. That's why it's crucial to watch upcoming quarters for signs of sustainable revenue growth, customer acquisition, and cost discipline. In contrast, Motorola isn't chasing headlines. It's building long-term value the old-fashioned way, through consistent performance, solid guidance, and reliable customer segments. Its government and enterprise clients don't make for viral news stories, but they provide recurring revenue that cushions the company during economic turbulence. For long-term investors who value stability and income over aggressive growth, Motorola offers a compelling option. Plus, its increasing role in public safety infrastructure and next-gen communication tools gives it long-term relevance that's hard to replace. It might not triple overnight, but it's also less likely to crash under pressure. So what should investors walk away with after these earnings reports? First, earnings still matter. Both SoundHound and Motorola showed that beating expectations can immediately boost credibility